Rise and shine trading family, it's the last day of April, and the market just handed out report cards. Some of you are going to love what's on yours. Some of you, not so much. Tonight we got earnings verdicts from the biggest names in tech. We got the Fed chair giving what might be his last press conference before he hands over the keys. And at 8:30 this morning, the economy itself gets graded. 5 segments today. The receipts are in. Let's count them.
Quick disclaimer before we get into it. Nothing we say here is financial advice. We're two guys with opinions and positions talking about what we see in the market. Do your own research before you put money to work.
Segment 1. The honesty tax. Because what happened last night in earnings wasn't just about beats and misses. Wall Street ran a full transparency test on every big tech name. Alphabet, ticker GOOGL, up 5.95% after hours. How? They show the receipt. Here's the search revenue. Here's the cloud number. Here's what AI actually contributed. Traders said, "Thank you very much."
The ad revenue held, not a one-quarter bump. Cloud acceleration was real, and critically, no vague capital expenditure promises. They itemized what they spent and what it returned.
Right. Not, we're investing in AI. Here's what AI made us. Wall Street has been waiting for that line for 2 years.
The opposite of that is Meta Platforms, ticker META, down 5.41%. And they had 2 problems hit at the same time.
Yeah, missed on AI transparency, and then China blocked their $2 billion Manus acquisition on the same night. That's a double punch. You're already on the mat, and someone hits you again. And the Manus thing is bigger than just a deal falling through.
Beijing's ruling was this: AI talent that originated in China stays under Chinese jurisdiction. Singapore incorporation doesn't change that. Manus was founded by Chinese developers who relocated the company to Singapore. Every AI company built by Chinese founders that moved to the United States or Singapore is watching this ruling. Every venture firm that backed one is rereading their term sheets right now.
It's not just Meta losing $2 billion. It's every Western company that thought buying a Chinese-founded AI lab was a clean acquisition.
The geopolitical perimeter just got drawn.
Microsoft, ticker MSFT, down 3.56%. And this one isn't about their quarter. It's about Monday. Amazon Web Services Bedrock went live April 28th. OpenAI models are now available through Amazon's infrastructure. Microsoft's exclusive moat on OpenAI is over.
Investors priced the moat breach immediately. Not the earnings number, the competitive landscape shift.
Advanced Micro Devices, AMD, up 4.34%. Clean beat, clean recovery. No drama from them right now. Sometimes a clean quarter is just a clean quarter.
And Coinbase, ticker COIN, down 6.32% while Bitcoin held flat.
Bitcoin's flat. Coinbase dropped 6. That's grading the company, not the asset.
Same maturity inflection we predicted Tuesday. Crypto infrastructure isn't getting a pass just because Bitcoin held its level. The business model is what's on trial.
Receipt or punishment. That's the new standard going into the rest of earnings season.
Investors have stopped rewarding AI spending announcements and started grading AI strategy execution. Alphabet confirmed it. Meta got punished for missing it. Every company reporting from here on gets evaluated the same way.
Segment 2. Jerome Powell gave what might be his last press conference as Fed chair last night. And the story is bigger than the rate decision.
The Fed held at 3.5 to 3.75%. No surprise. But the dissent block is the number you want. 4 dissenters. That's the largest single dissent block since 1992. The center of the Federal Reserve is shifting toward neutral to hawkish.
4 people inside the Fed saying, in public, they disagreed with the chairman. That's not a small signal. That's the institution showing its fracture lines.
And structurally, the case for cuts is gone through the end of the year. Brent crude is sitting around $120 a barrel. You cannot cut rates into that environment. The inflation math doesn't work.
TB caught something in Powell's press conference last night. Walk me through it.
He cited private domestic final purchases instead of headline GDP in his prepared remarks. That's a very specific metric choice. It strips out trade and inventories and tends to look cleaner than headline GDP when net exports are dragging. He already knew what the GDP Now tracker was showing. He was hedging his own exit speech.
Powell knew the GDP number was going to be ugly. He picked the one metric that makes it look less ugly. That's a tell.
Short version, Powell was already hedging last night. He knows what's coming at 8:30.
And here's the human part that I keep coming back to. Powell was supposed to retire. He reversed that decision. 3 months of legal pressure from the administration trying to remove him. And instead of walking away, he said no. I'm staying as governor. I'm not stepping down. That is not a guy who thinks the institution is safe. That is a guy who thinks the institution is under threat.
And into that environment, Kevin Warsh advanced out of the Senate Banking Committee today. He takes over as Fed chair on May 15th.
So Warsh inherits a split committee. Brent at 120. A GDP print coming that would make Powell's solid growth comment look embarrassing. Zero political cover to cut rates.
The constitutional standoff inside the Federal Reserve is real. Not a talking point anymore.
All right, segment 3. Apple reports after the close today. And here's the question I keep asking. Wall Street just graded every AI strategy in big tech. Alphabet got an A. Meta got an F. Apple is next. What grade does Apple get?
The standard is clear after last night. The street wants to see what's in the AI receipt. Not the announcement, the revenue line. Apple's AI play is Apple Intelligence. Essentially Siri version 2. No cloud infrastructure story. No $50 billion capital expenditure headline. And Cook is navigating China manufacturing tariffs at the same time.
What does Wall Street actually want to see tonight?
Evidence that Apple Intelligence is driving hardware upgrades or services revenue growth. Without that, the AI story is cosmetic.
I'm not predicting the number. The setup is enough. Watch the receipt or watch the punishment. That's the show after the close. Quick hits on everything else reporting tonight. Eli Lilly, the weight loss drug revenue story. GLP-1. Demand has been a bright spot all year. MasterCard. If the consumer is cracking under $4 gas, MasterCard sees it before anyone else. That's your spending health check. ConocoPhillips is printing into $108 oil. That should be a strong number on the math alone. Reddit's advertising revenue quarter. Still proving the business model has legs. Rivian and First Solar are on the slate too. Brief mentions. Watch guidance on both.
Those are the names to track tonight alongside Apple.
Segment 4. TB, this one's yours.
Intel. I have 54 shares. Entry at $82.35. Current price $96.91. 3 profit tiers already taken. Stop is at $87.37. That's where I exit if it reverses. Flagging this as Mike Jones' analysis, his take, not confirmed news. Intel reportedly broke its Dotcom era all-time high. If that holds, the floor thesis is real.
Wait, the thesis from Tuesday. The government taking a 20% stake as a structural floor. If Intel is breaking highs it hasn't touched since the year 2000, that floor thesis may be confirmed.
Correct. The government backstop argument gets a lot stronger at all-time highs. Wave trader numbers once. $111,663 in equity. $34,832 in cash. 8 open positions. Cycle P&L, negative $9,417. Intel is my biggest winner this cycle at plus $1,168. Wolfspeed, WOLF, is my biggest loser at negative $5,526. 310 signals scanned yesterday. 1 entry. ZIX rate of change at negative 1.1, clear to trade.
And Cisco, because Intel isn't alone.
Cisco, ticker CSCO, broke a 27-year high. $2.1 billion in AI infrastructure orders booked. The infrastructure layer is winning while the AI application layer is getting sorted out.
That is the other side of the honesty tax. The boring plays that just work. Intel, Cisco, nobody's making memes about them. The numbers are just there. TFT, quick update, 6 positions, all green, system up, $571. Alphabet hit on earnings. 4 to the more. Moving on. Igmid 5, the number.
GDP now is tracking 1.24% growth for the first quarter of 25. Wall Street consensus is 2.5 to 3.0%. That gap is not a rounding error. It's a fundamental disagreement about what's happening to the economy. The fourth quarter of 25 was already revised down to 0.5%. If the first quarter prints near the GDP now estimate, the two-quarter average is under 1%.
And inflation?
PCE running at 3.5%, under 1% growth with 3.5% inflation. That's stagflation in the headline numbers. Not a prediction. If this print lands where the model expects, it's the definition.
And Powell said solid growth 12 hours ago.
He did.
8:30 this morning. That's the number. Everything we just told you about earnings, who opened the books and who got punished. About Powell staying to defend the Fed. About Intel breaking highs it hasn't seen since the Dotcom era. This number decides if any of it matters. If growth is printing near 1.24 and inflation is 3.5, the Fed can't cut. Traders reprice risk, and those earnings beats feel a lot smaller. That's the frame.
Watch the spread between the official print and the GDP Now estimate. If the headline comes in above 1.5%, traders may read it as the soft landing surviving. Below 1.2, and it confirms what the tracker was already saying.
Here's what we're watching the rest of the day. Apple after the close. We find out tonight if they get an A or an F, and that sets up tomorrow's open. MasterCard and Eli Lilly tonight too. Those print the consumer health check and the healthcare demand story going into May. Intel, does the dot-com high hold or was that one session? $87.37 is the line. And the GDP reaction. Whatever prints at 8:30, the price action over the next 2 sessions tells you whether the bid holds or whether this starts to unwind.
And one more, watch the 10-year yield after the GDP print. If the number is soft and yields rise instead of drop, that's the stagflation signal happening in real time, not in a forecast.
Report cards are in. Trading family. Some of you passed with flying colors. Some of y'all are getting held back. We'll see you tomorrow to grade the rest of them. Don't check your portfolio before the 8:30 print. Trust me on that one.